Okay, so we're gonna be looking at gold.
Say that again.
We're gonna be looking at gold. Let me
Okay.
share my screen. All right, so you can see my screen.
Yeah, I can see it.
Awesome, awesome. All right, so let me remove the indicators because we're gonna do it without indicators.
Like, let's say I wanted to use indicators in the future. How do you distinguish which lines are going to be like your 50-yard line and stuff like that?
Well, when you add indicators, all you do is go up here to to the gold spot or whatever pair you're on. You gonna
Hmm.
see these little three lines right here. You're gonna click
Yeah.
those. When those pop up, you're gonna say add indicator right here.
Okay.
And then when
That's
that
a lot
pops up,
easier than
yeah, you type in um, moving average, and then you want to moving average. You want to choose exponential moving average. Once you click that, that's going to pop up on your screen over here. And then once that pops up on your screen, you are going to go to the indicator tool list. Well, to how to edit it, go to the settings. And how I got to those settings is this little tool right here, tool symbol.
Okay.
Settings, and then you go up on here. You're going to change to whatever color you want, and your input is going to be where you're going to put the 50, the 9, or whatever length you want it to be. So right there, you'll type in 50 if you want to do the 50. You'll type in
Okay.
whatever number indicator you are comfortable trading with. You're going to type that number in, and it'll pop up on here. So this is what it looked like when it pops up on here.
Okay.
All right, and then and so on and so forth. And if you wanted to use other indicators, like this one right here is the Ichimoku cloud, you'll go to that go do it the same process of how I was just doing it, and then it'll pop up like this, and it'll show you the cloud. And there's different strategies that you can do with the cloud as well. And
Okay.
majority of indicators are support and resistance just in the past. So wherever that support and resistance is, usually it rejects from the indicator, or more likely reject from the indicator, because indicators predict what the market should do. That doesn't mean the market's going to do it, but it's predicting what the market should do. So there should be extra confirmations on top of your analysis.
Okay.
All right. So what we're looking at here is gold. So gold looks like it could be really breaking this line of resistance right here. But we're gonna see if that's gonna be a fake out or is it gonna drop again. But I do believe it might drop again and then go up. Only because it's been playing around with this zone. But this is the inverted actually, so I'm looking forward to buy sometime this week, because this
Okay.
is definitely an inverted right here. And then see what makes this a head right here is because it passes this line of resistance right here for the shoulder. So this is the left shoulder. This is the head, and it probably could go up and do to this left shoulder and make a right shoulder, and then more likely touch this and then take off.
Okay. So this is like a inverted head and shoulders.
That is the inverted, yes. Inverted head and shoulders right there. Around this area right here. This area right here is considered the neckline.
Okay.
Considered the neckline of the head and shoulders pattern. So, like I said, this right here could still push down here, because people could be trying to buy right now when literally, how I look to use the 50 is I look to see, look, it's where is it? Around the 50, right?
Yeah.
So usually it bounces off of the 50. And this is how I use the indicator. See, it bounces off of the 50. Like every time. It may wick it, but it still bounced off the 50 right there.
Yeah.
So what I'm looking for to do is to sell at least one more time right there. Maybe down to this zone right here. It could even just wick down in that zone. But that's what I'm looking forward to do just because of what the indicators are saying. But this thing could push up, and keep going. So you just got to be very careful. And this is how you would set your stop loss. If you if you enter right now, say you enter right now for a buy because you believe it could push up to this neckline right here. So what you would do is you will put in your buy, and then below this red line right here, you will put your stop loss because that is a line of resistance. So it's either not going to push past this line of resistance and go deeper, or it could just push up. So when it pushes up, where your take profit will be at this neckline right here.
Okay.
Because that's going to be the next place where it's going to reject and do its thing. Either you could keep in your buy because you're already in that same entry, or you could do a take profit. So we do a take profit on that if we put a buy in right now up to this neckline. We're looking at 140 pips. So that's good money on a 5-cent lot.
Okay.
And then like I say, either you can hold it, whatever type of trader you are, either you can hold it till it goes back up here and do your take profit right there, or you can hold it, let it go right there, let it play around in the zone a little while until it actually takes off, and it could be a long-term trade, So I'm just waiting to see what it's gonna do. I don't know from the candle, the previous candle, which was a bullish candle.
Okay.
I could actually see that being either doing a buy because it passed this previous zone right here. See, it pushed past. So what we're looking for it to do is to eat this not this candle per se. This candle might not do it on the hour, but the next candle, if it closes above here, is more than likely a signal candle. So the 8 o'clock candle is more likely going to be the signal candle if it doesn't do a big push or a big jump down in this next hour.
Okay.
Because it could stay doing the same thing in this next hour. The candle could be like this within an hour, for that whole hour, until it actually makes its move.
Okay.
All right, so that's an inverted on gold. So that was a pretty good little setup.
How do you get how you how do you change your settings so that you can like draw your lines out?
What do you mean draw your lines out?
Like how you taking it and you click on one point and you can drag your line down. Is that an indicator as well?
What, right here?
The orange line.
So these orange lines right here?
Yeah.
Where I made the inverted?
Yep.
Okay. No. That's just how you use the Trading View. All right. So Trading View, you have the tools over here for Trading View. Right. So these tools right here is what you click on. See that made that orange line right there, and then
Okay.
you have options under here as well where you can do other stuff to mark up your charts as well. Horizontal line will be the red lines right here. You could do arrows for trend maybe. You see a trend, like it's a downtrend if you didn't want to use the indicators, right? So how you do a trend line is you do one point to another. So wherever it rejected before, you want to look at that. If this area wasn't here, my trend line probably would have been right here. My trend line would have probably been here.
Okay.
That would have probably been my trend line right there. So it's still a downtrend. Still a downtrend. So yeah, so these tools over here help you to draw over here. So you can do the draw, like how I was circling the points up here.
Yeah.
You can use that with the pencil. You can put text on there. You write some text on there, like resistance line. Do it like that. Support. You can do text on there, resistance line, support line.
Okay.
So and I'm gonna show you how to do the Fibonacci. So Fibonacci is a tool that measures the percentage of retracements. So retracements are usually what goes against the trend. Basically, this is the downtrend, and then this is the retracement. This is the downtrend. This is the retracement. Now, after this retracement, is considered consolidation. See, so consolidation is usually in between other zones. So I basically found this zone right here as support as well. But if you want to look at to see how the whole thing is consolidating, you can just put it aside of a consolidation box. You know, from highest point to lowest point.
Okay.
And you can either include wicks or not. We were told to include wicks, so just include your wicks. Let's go over here. Use your rectangle, and shade in this box right here. This could be your consolidation zone, and then you see I got the top of the wick for here anyway already. So what you want to do is find the nearest body candle. Look left and try to find the nearest body candle. So the nearest body candle will probably be like right there from that zone, from that high. And then you want to put it in consolidation lows. So after that pullback, it became a consolidation zone because it's still consolidating within inside these zones. But within those zones, there's going to be other support and resistance and all that good stuff. So those are pullbacks, and that's what a Fibonacci retracement does. It actually measures pullbacks, retracements. The different languages for different traders. But okay, so let's actually clear the all this stuff off here. Blue drawing, boom. And then we're gonna, how you find the Fibonacci is this pitchfork right here. You click this, and then you're gonna go down here to Fibonacci retracement. So write this down. There's a rule that for every pullback is at least gonna pull back. The rule is it's gonna pull back to at least to the 50% line or the 618. So I customized my Fibonacci, so this is not really going to help you. But when you do your Fibonacci on your phone or on your laptop, it's going to show the 618. But I'm going to show you in reference to where the 618 is on my Fibonacci, because I got my 618 as the 75. 75%.
So you can say that one more time. You said for every pullback, there's a
for every pullback, there's gonna at least pull back 50% of that move,
Okay.
and or 618, 61.8% of that move, 61.8, yeah.
Okay.
Okay, so this is the weekly. So you could do the weekly. You could trade off the weekly. The weekly is going to be more long term. Day is going to be more long term, and then you're going to have an hour. You're going to have 2 hours. You have 3 hours. So all these are what the different candles represent. So right now I'm on the weekly candle, and I usually do this long term just to look for where price could retrace to, because we want to look long term. So on the daily, maybe let's see what it looks like on the daily. So what you want to do is basically find the longest candle. Find the longest candle to the left. It could be, you can choose just about any long candle to the left, because this is the long term. So this is the daily. So this is a whole day right here. This is a whole day right here as well. Whole day right here. So I'm gonna put Fibonacci's on all these in a minute, and I'm gonna show you where they all line up. They're probably gonna all line up around on a Fibonacci line. It's gonna be all
You
right. So
said from the longest candle.
yeah, they call it the engulfing, bullish engulfing,
Okay.
bullish engulfing or bearish engulfing. And so you're gonna find the longest candle. Oh man, let me make my screen bigger. Okay, there we go. All right, so the 50 is the red. The 50 is the green. 50 is the green line. And then the 75 right here, which is, I probably need to change that because it's black. So I can show you how to actually change your stuff inside your indicators as well to customize them. I go to settings. I want to change this 75 right here to a different color. So I'm going to change it to blue or something because it's going to show. And then boom, it's blue. So 75 is blue. All right, so usually it's gonna pull back either to the 50 or the 75 on mine. But when you pull up your Fibonacci, it's gonna, where the 75 is, it's gonna be the 618. So that's gonna be the rule: the 618 or the 50.
So it's like green on mine. All right.
Hmm. All right, so what we're looking at right here, when we put that 50, when we put it on that 50, as you can see, it really already retraced up to the 50. You know, a day ago, which was Friday, it looked like it retraced up to the 50. Because as you can see,
It's surpassing it a little bit.
right here, it barely made it to the 50, but that still could have been a sell opportunity, right? Because it retraced all the way up 50% of this candle, right? So, and if you look left, it'll be this candle right here, it'll be the next longest. So let's put a Fibonacci on that and see where they meet up. And you always want to do highest to lowest point.
Okay.
Oh, it disappeared on me. See. Highest to lowest point. All right. So yeah, they pretty much meet up where they meet up, except for it looks like the 25% meets up around the 25% of the other candle. Then it looks like the 50% meets up with the 75% of that candle, and so on and so forth. So I mean, the zones are pretty much the same. So let's see if we do this large candle right here from top to bottom. So yeah, so wherever you see a double line, but as you can see, the 50 is pretty much consistent as far as a major zone where it could retrace back up to. So what you want to do is when you see that, is you just want to mark that zone, because that's going to be a money zone. It could be a money zone for a sell. You just got to wait for it to break that zone for it to be a buy. But it's pretty much a money zone when you see that meeting up like that, because it's almost like a double. See where that meets up. It's pretty consistent where it meets up around that 50.
That makes sense.
All right.
I'm drawing it out too on here as you go, so I can kind of get a feel for it.
Okay. Awesome. And if you want, I could definitely, once it starts recording, I can find out how I can send it to you, send this whole training to you as well.
Okay, that's cool.
So you can just replay it over and study.
That's cool too. Are you recording on Apple computer?
I am.
You can I think you should be able to just iMessage it to me to my computer using my iCloud.
Really? I just learned.
Yes.
I just learned something, because I usually just do it because I have to wait for it to start to finish. How do you do that process? Because I have to wait for it to actually upload once it saves, finish saving on Zoom, and then I send it to you, because I just usually send it through an email or something. But that would be
Are
probably a
you recording it using Zoom, or are you recording it using the MacBook?
Zoom.
So you can record using the MacBook, like you can record your screen, and it'll save like a MP4 file to your computer. You can just drag and drop it.
Wow. That I just learned something, so I don't have to really wait to it. So I'm gonna exercise that the next time I do a call. Because I've been doing it old school style, man, with just waiting for it to download on Zoom and then sending it to Zoom. Yeah, so okay, that'd be a lot easier.
Yeah,
A lot
especially
easier.
if you send it to like another Apple product.
Facts, man. All right, so that's the Fibonacci. Did you have any questions about the Fibonacci?
No, I kind of get it, especially like on doing it with you as you're doing it. I can draw it out and I can see it, and then I can change my color for my lines. It's almost kind of like the stop and resistance, because like once it hits certain points, it's gonna go back down and bounce
And
back up.
yeah, facts. And that's exactly how you can use it. You can use it as support and resistance. You don't really have to physically find support and resistance all the time. You can just use, sometimes you can just use the Fibonacci tool, and it's going to show you where stuff is rejecting at. So that's what the tools are there for. They're there to help you enhance your trading. You don't have to be drawing all those lines. Let the Fibonacci speak for itself.
Right.
All right. So we're gonna look at EJ as well. It's Europe JBY. That's what I see. I actually with this, I actually just see a buy coming in. Like, for real. I don't know if it's gonna buy up to that zone, or it's gonna buy um because I see this this zone right here. So that is definitely a pretty firm resistance. See, on the daily, so it's long term. So let's look and see what is forming on the hour. And you see the same area where the shoulder would be as well marked on the daily. See that?
Yeah.
Shoulder, head, come back down, do the shoulder. I can see it come back down and doing that shoulder though. What? It could take off, and that could be the little shoulder right there that it made, and it still could take off, man. So just really got to be patient and watch it when it comes to stuff like that. But I could actually go over, if you want to just put in orders.
Okay.
There's a way you could just put in orders.
So like when the market opened back up.
Oh no, well, just whenever the market moves in that area that area, you can mark it up there and just put in your orders and
Like
wait for
set
them.
it.
Yeah, wait for them to come to you. All right.
Okay.
So what you want to do is find the highest and the lowest point. You always want to find the highest and the lowest point in Forex, just so you can know. And you want to do it in this and in this instance, you want to see what is the lowest point, like from where price is, so close to price. So price is right here, and what is the highest point? Highest point is this wick up here. Is this point? So like I said, it's that wick, and then you want to find a body candle to put it on. So the next body candle will be these still. Same thing I just showed you with finding the consolidation box. You want to find consolidation box and consolidation and wait for it to break consolidation. So it's going to be more of a waiting game.
Okay.
So the lowest point will be where I got this one, but then you want to look left for the body candle. The body candle is right there. And then, just like I said, you want to get your boxes. And if you look at this, I'm just gonna show you this Fibonacci on this candle right here. This is a little candle right here, and let's see where it retraced to. You see that?
Mm-hmm.
It retraced down to the 50, like on point. So, just like I said, it could be, you can use any candle as a signal candle as far as that 50 is concerned. Because just that candle that's close to the thing, it obviously wicked down 50% of the previous candle, and obviously is going to continue to go up at this point. So that added up really good. Remove that. Okay, so what you do is find the resistance and support at the top and the bottom, and where your entries would be, you would do a buy stop of 30 pips. So you want to calculate 30 pips, and you want to put a buy stop just above the last resistance line of that box, or you could do it a little bit higher, because when you look left, you see these wicks. You see those wicks right there. So either you could do it above those wicks, like you could put it right here. You can put your entry right here for a buy, or you can put your entry right here for a buy. What would you feel comfortable putting a buy at?
Probably at the 1952.
1952. So right there.
Yeah.
Right there. Okay. Yeah, that's a good place to do a buy, because that knocks out any other rejections. So let's do it from where you said. And let's do 30 pips. 30. Oh man. Let's see. Yeah, let's do 30. Let's do 30 pips from that, from the 52 that you were saying, because that actually knocks you out of being rejected from. All right, so that's 30 pips right there for gold. So that actually knocks you out of. So this it could wick, because it could, if you do it right here, it could wick right here and then drop, because it's a neckline. You gotta understand that that's a neckline. So it could wick right there and drop, but it could at least push. It could at least push. I wonder if from this wick, from the bottom of here to this wick is 30 pips, because that'd be an easy little trade too. From if you do it from there. Um, okay, so yeah, we're gonna do 30 pips from there. So what you want to do is get your lines. You can change the color of the lines. And this gonna be your entry. This gonna be your entry. Let's change the color of that line to like blue or something. Blue. And then from that line, do 30 pips. That line, do 30 pips.
And is it best to trade on like a 1-to-1 ratio, 1-to-10, or 1-to-30? Like, what's the best ratio to do as far as?
You mean how many times you should do a trade?
No, as far like leverage. Like, cause I know when I set up my demo account, I can change it. It normally defaults to like a 1-to-500 ratio.
Yes, 500 is a good one, to like the top ratio, because you're able to leverage a lot more in your account.
Okay.
Yeah, you're able to leverage a lot more in a $50 account, which means you're able to do a higher lot size, things like that.
Okay. Makes sense.
So those would be your entries. Your entry, take profit right here, and then of course, if it pulls back, put your stop loss on this red right here, 49.0.80. So entry is the top bottom blue for the buy. So you're gonna put a buy. Let's label that. Buy stop. So buy stop means it's gonna go up and you're expecting it to continue to go up. So that's what a buy stop does. T. TP. Buy stop entry right here. And in between there is, let's put your buy stop right here. Make the font a little smaller. Let's make the font like yellow. There we go. Stop loss. Stop loss in that zone. That's how you find your take profit, your stop loss, and your entry.
Okay.
And then you would do the same thing for the bottom, but the bottom you'll just do you're gonna do a sell stop for the bottom. So sell stops are usually when it is going down in a downtrend for a sell, and you're expecting it to continue to go down once it passes a certain zone. So you're gonna do. So you could either do it right here from the lowest point right here for your entry, or you could do below these wicks. Which one would you rather do? Below these wicks or below the lowest point?
Right before the lowest point.
Right before the lowest point? Okay. All right. We'll do 30 pips. Now, the normal is 30 pips, but you can do 15 pips. You could do, 20 pips. It's just 30 pips is usually how the market moves. It usually moves in 30 pip increments. Right there. Then you would just put your lines, stop for your sell stop. So that's like 23 pips right there. So that's hefty enough because gold's gonna fill up your account anyway. So 23 pips on a 5 cent line on gold can fill up their account pretty good as well. So
Does
you don't have
gold
to.
usually move? Does this pair usually move fast, or is it one that kind of moves slow and over time?
Oh man, gold moves really fast, and it has like a mind of its own. Usually, pairs have certain times when they move. Gold usually moves majority of the time. Gold moves is more volatile is in the morning, like 4:30 to like 9:30. So that's usually when gold moves the fastest and moves the most. But gold usually moves just about throughout the day. The slowest pairs that move will be Euro USD, and all AUD pairs move slow.
Okay.
All right, so that's how you find a breakout entry point stop loss, and take profit. Here we go look at Euro USD really quick. Because Euro JPY. Because Euro JPY looks like it's an inverted head and shoulders as well right now. So this is what we're looking at on Euro JPY. So of course these are pullbacks right here. Pullback 1, pullback 2. But as you can see, after pullback 2, it starts to consolidate, right? Starts to consolidate after pullback 2. So that makes it a head after it passes that and starts consolidating. It creates a head for the inverted. That's the head right there, and this is obviously considered the neckline now, because it keeps going back up to the zone and coming back up. So what we're looking for is probably to pull back down here. Or it takes off again, or it could still stay in that zone still. But this is what I'm looking for it to do. Just looking for it to break out of consolidation. Do you have any questions on the inverted or anything?
I'm starting to make a little sense. I think once I start practicing a little more now that I figured out how to draw the lines and stuff in.
Awesome.
So how do you add money to Hugo Way using Cash App? Because I was trying to do it with Coinbase, but they keep rejecting my cards.
Okay, yeah, Cash App is the easiest way. So the process that you do through Cash App, let's see. Yeah, I'm gonna type it up on here. So what you do through Cash App would be so how you would do it is first go to Hugo Way. Hugo Way. First step is go to Hugo Way and say you want to do a deposit through Bitcoin. And once you do that, it's gonna give you a wallet that's gonna give you a first you type in the amount of the deposit that you want to do. So say you want to do $100, you type in $100. And then it's gonna give you a wallet to copy and paste. Then it's going to say, then you go to Cash App. You're going to go to buy the squiggly line and go to buy Bitcoin. You're going to buy Bitcoin through Cash App. Once you buy the Bitcoin, say you want to do the $100, it's going to take a fee. So either you want to do a little bit more than $100 if you actually want $100 to go inside your Hugo account, to do like $105 and let them take the $2 or $3 fee it is to do the buy for Bitcoin. And then you go, once you buy the Bitcoin from Cash App, Then you're gonna go to the little house symbol down at the bottom. You see the home button. So home button. Home button. Cash App. Then after you go to the home button, it's gonna say withdraw. You're gonna click Bitcoin. And it's gonna show you in your wallet how much Bitcoin you have and the value of it. Once you click Bitcoin, then it's gonna say where do you want to send this Bitcoin money. So that then it's gonna say paste. So you're gonna paste the wallet from Hugo Way, and we're gonna copy it. Copy it from Hugo Way. Copy wallet from Hugo Way and paste into Cash App. And then it takes like 10 minutes for that to actually pop up. It actually takes it 10 minutes for it to actually get into your account.
So I'm on Hugo's Away. I see a wallet, but I don't see where I copy and paste.
It should be. Have you put in the total that you want to put in for Cash App?
No, I haven't gone on Cash App yet. Well, I've never bought any currency on Cash App. So let me see. Go to my Cash App.